Three things you need to understand about life insurance is having enough, having it enforced, and having the right kind. Well, ladies and gents, just here to drop a few cents. You're with Earl, the money coach, and I want to break down these three factors that you need to know about when you're thinking about life insurance. It's life insurance awareness month. So I'm not here to talk about the pros and the cons, what's better, term insurance, permanent insurance, but it's understanding these three factors. So make sure you guys like, follow, and subscribe so you get more information. And feel free in the description if you need to schedule a consultation, reach out to me. But let's break it down. Number one is the best kind of life insurance out there. It's not about being term insurance, it's not about being permanent insurance. It's about having something in place when you need it. The best life insurance is the one that's available when you need it. I cannot tell you how many people have insurances that are pretty much useless. When I say useless, 98% of term life insurances don't pay out. And it's not because they're bad, it's because either people outlive their policy or their policies lapse. Why is that important when I say that figure? Is a lot of you may have had life insurances. You had a 20-year life insurance, a term, you let that bad boy go. Now, something happens to you, even if you have living benefits or anything, guess what? It's not enforced, it's not active, your family doesn't get anything. And now, lapse policies are huge. We're talking term insurances, permanent insurances. People stop paying it, something may happen, they may lose a job. Sometimes the last thing they think about is a life insurance policy. Now that policy is lapsed, and sometimes you have, 2 or 3 month grace period. But if your policy's lapsed and something happens 6 months down the road, your family can't do anything. So I always say the best insurance in place is the one that's actually in place at the time it's needed. When someone passes away, you need to have your life insurance in place. Or even if it's for living benefits. I have a client, I've been licensed for the last decade. I have a lot of stories. But this client, they ended up getting breast cancer. They're one of my original clients from 2018. They've had the policy up to 2023. They stopped paying it. They said, "Oh, a lot of stuff's going on. I can't afford no $90 a month," because they were a little bit of an older client. Bam. Earlier this year, 2025, they had cancer and they had living benefits. I had a $1 million policy with living benefits. So now that they have cancer, they would have been able to access those living benefits as they're living to use it for that specific purpose. But the policy lapsed, they didn't pay for it, and now she came back, "Hey, Earl, what can you do?" Well, unfortunately, there's nothing I could do. So, number one is the best life insurance is the one that's in place when it's needed. Number two is how much life insurance do you need? Well, first and foremost, there's something called the dime. Okay, the dime method. And the dime is an acronym that stands for your debt, your income, your mortgage and mortality, and then education. Those four steps, DIME. But I always say, first and foremost, you should have at least the income portion regardless, which is 10x your income. So if you make 50,000 a year, 10x is 500,000. The reason why, because when life insurance was designed, it was literally supposed to be like a replacement for when something happened. So we always say 10x because if you were to pass away today, your family could sustain the same lifestyle for the next years that are coming up, especially if you're the breadwinner. So we say you should always at least do 10x your income. Officially, you should have the dime method. All your debt, your car payments, your credit cards, your loans, 10 times your income for the I, the mortgage, how much you have left on the mortgage, mortality, I'm sorry, including everything for death purposes and all that. And then education. If you have children, do you leave enough for their education? Do you have enough to take care of your bills? All that kind of stuff is super important to make sure that you have enough insurance. I cannot tell you guys, being licensed for the last decade, how many people I've sat with. Oh, I got 100,000. The agent gave me 100,000. Why? They have no idea. So that's why you need to know exactly how much is needed. So make sure you have that in play. And then number three, and most important, is living benefits. Life insurance, like anything else, has evolved over time. Before, it used to be straight up life insurance, no living benefits, meaning, hey, you get in a car accident, you lost your arm, you lost a leg, but did you die? Nope. All right, then keep it moving. Now, with living benefits included, when something happens while you're alive, you could get access. It's called life insurance, not death insurance, for a reason. You're supposed to use it while you are living. So the basic living benefits are critical, chronic, and terminal illnesses, folks. Critical, chronic, and terminal illness. Exactly what it sounds like. Critical, long story short, you're about to die. Heart attack, cardiac arrest, cancer, all stroke, all these things that could cause death. That's a critical illness, and they could pay out for the recovery process. And then how much you get, it depends on the severity. I'll say you could go from 25% up to 75%. A couple of companies do more, but generally speaking, from 25% of your death benefit up to 75% of your death benefit, you could get as a living benefit depending on the severity. For example, stage 1 cancer may get you 25%. Stage 3 cancer will get you 60 to 75%. So, depending on the severity, that's your critical illness. Your chronic illness is anything that's long term. You're not going to pass away from it, but it's a long term need. You need nursing care, nursing assistance, nursing home, all these kind of things. So, and it basically is triggered by what they call the ADL. And ADLs are activities of daily living. If you can't do two of the six ADLs, which is, using the bathroom, putting on your clothes, getting in and out of car, transportation, consonants, all these different things. If you can't do two of those six, it could trigger a long-term care need, folks. And generally speaking, long-term care gives about 2%. Some companies do 2%, some companies do 3% on a monthly basis. So let's say you have $500,000 of coverage, you need a chronic illness, they'll give you 2%. So that's $10,000 every month until the policy is gone through its course. So that can help you take care of nursing homes, take care of all these things. That's huge. Why is this important? 7 out of 10 people over the age of 65 will have a long-term care need, folks. So 7 out of 10 people, as they hit retirement, as they get older, health issues are going to arise. How many people do you know their family has to take care of their parents, or they're in a nursing home or nursing homes? My father was in a nursing home. It was $8,700 a month. So 6 figures a year. He had $430,000 in it saving for retirement. Over 300,000 because he was in a nursing home for 3 years was used. Folks, it's a lot. And then obviously terminal illness is the last of your living benefits riders. Is if the doctor says within a certain time period, hey, Mr. and Mrs. Client, you have 8 months to live, they could pay out your whole insurance up front. That way, you can enjoy it, live your life, or take care of things. Companies are different. Even on my platform, I'm a broker. I have some companies that do 6 months for terminal illness, some do 12, some do 24. So make sure you have the right one. But you want to have living benefits in general. The majority of life insurance products today have living benefits already included. So if you have an older life insurance, or you have a company, even if it's brand new, and they don't have the living benefits, you need to check that out. So, folks, those are the big three things I tell people, and I'm not saying which one's better, which one's worse. Term insurance, whole life, IULs, variable universal life, all these kind of products. I'm not talking about that. I'm talking about the big three: is having enough coverage, making sure you have the living benefits, and make sure you have it in place if something happens. Once you have those rules, then you can figure out there's pros and cons for everything, every life insurance, any kind of investment you do, any kind of job opportunity, you guys know it. There's always going to be pros, there's always going to be cons. So you need to weigh those factors. So if you do need help with your life insurances, I could offer all of them for you. All right, we could sit down, we could do a consultation, see which ones are better, which one's right for you and your needs. All these things you need to take into account. So with that being said, ladies and gents, just here to drop a few cents. You were Earl, the Money Coach. Make sure you like, follow, and subscribe. Check the links in the description so you could open up a health savings account. If you're a business owner and you need 6 figures for a loan to start your business, or if you're just looking to get your budget and everything squared away, check those descriptions, and I'll see you on the next video. Take care.